Welcome to the live webinar, everybody. I appreciate it. This is going to be casual. Chris is used to very structured interviews, but he's a wealth of knowledge. I spent some time in Miami. We can touch on that trip if you want, Chris, together as kind of a brainstorming trip. You did some business. I hung out with some friends. We're becoming closer friends over the years. I'm used to doing 10-minute straight shot interviews, talking to a camera, so you don't catch me much in a casual environment. Chris is always on the other side of the mic, even though what you've built at Fort Capital is impressive. You've all heard Chris's story. Bought $300 million worth of industrial real estate last year, building a very big real estate private equity company. And it's what you're doing is really awesome. People don't understand how big of a badass you are. I wish that you bragged a little more in public. I know you're a very humble dude, but yeah, you're a badass, man. I'm excited to riff on a couple things. And the topic today is not going to be as much go back in the past and talk about what we've done. We're going to stay in 2021, might talk about a couple of deals we did in 2021, talk about where we're seeing things moving in 2022. This is conversation style. We're going to riff on, and we're going to use as kind of a template your tweet thread that you made 19 predictions. So we can use that as a conversation starter. We'll go back and forth. I have some notes. Chris, you have some notes. Let's give the people what they want. We're going to have a hard stop at 40 minutes in. So 40 minutes from right now, we're going to have a hard stop. If you and I are in the middle of something, that's a good sign. That means we need to do this again. And if we're running out of shit to say, that means we did enough.
I don't think we're going to run out of stuff to say. Yeah, I'd start by saying it's been an absolute pleasure to get to know you. Miami was a lot of fun, and I want to do more trips like that. For anybody listening, it was a very small group, but very concentrated, and a lot of ideas came across the table and stuff to build on. I'm looking forward to going through this list. I would start by just saying to anybody listening, my list and the things that we've talked about, a lot of how I've lived my life is observing people first, being willing to learn and ask questions, backing that up with data, going to search for the data to maybe verify what my gut is telling me. So some of these predictions are very data-driven. Some of them are just guts, just watching what people are up to. If you followed me on Twitter, you probably know that I'm a little bit vocal that, I wouldn't trust the headlines in the media as much. I'd verify what you're reading because a lot of the times they're very, very wrong and they're meant for different reasons than to provide facts. So, some of the things we'll go through today is not what you're reading in the media. So it might sound contrarian, but it's backed up by what people are actually doing and people I'm talking about. So I'm excited to chat.
Yeah, Chris, you get a beat on a lot of different people. I'll speak from a lot of my personal experience as well, just getting out, seeing, talking to people that I know as well. But guys, come on, it's me and Chris. This is our opinion. Don't hold us too tight to any of this stuff. We're telling you how what we're seeing out there. You might disagree with us, which is great. We might disagree with each other, which is great. All right, Chris, let's dive in. So interest rates fuel our business. Real estate in general. When debt is cheap, real estate booms. When debt is expensive, real estate is tougher to buy and therefore less valuable. We know a rate increase is coming. Your first prediction, interest rates up a minimum 50 basis points. That's what we're preparing for. I was talking a lot yesterday during the talk with Keith about my debt maturity, how we're worried about those things, how we're going to try to secure longer term debt. We're going through all of our portfolio trying to secure longer term debt. Tell me why this is one of your main predictions that interest rates rise.
Well, one, the Fed said they were going to do that. They announced 3, but 2, like the inflation is running rampant. People are making hand over fist money in some industries.
Everybody I know is making bank right now.
If you're in real estate and again, there's been a few sectors that are hit more than others, but I'm not a world economist finance guru, but I just have this feeling. And again, going back to what the Fed said and what we're seeing in our own deals with where rent growth is going, I think the world can handle it. Is it fun? Is it the greatest thing ever? No, it's funner when it's more fun when interest rates go down. But I think we can handle some growth. And on top of that, the Fed said they're going to do it. Inflation's running rampant. So I thought it was a good prediction.
I've seen a little bit of a shift in you. I think obviously we heard the tremble in your voice when you were recording Fort podcast in April of 2020, right? We were all shaking in our boots. You were scared. I was scared. I encourage you to go back and listen to some of Chris's updates at that time just to get a sense for how we felt about things if you were in the situation that we're in, where you own a lot of real estate. Then we talk 12 months later, and you're probably the most bullish that I've ever heard you be. And then I talked to you in Miami 2 weeks ago, and it's kind of shifted back to a little bit of caution. And okay, you talked about how you're going to worry about some of your maturities, try to get some different debt set up. What keeps you up at night right now from a real estate perspective?
Yeah, I would say the one thing I learned is that the scariness came from not necessarily industrial real estate is what I was scared about. I just was scared for the world.
And this is 2 weeks ago.
This is what?
You're talking about recently.
I'm not about April of 2020. I was very, very scared was, you can't just shut down the world and it just like flick a switch. Like the time it takes to shut down the world, it probably takes 10 times as long to turn it back on. And that's what we're experiencing now. So, but what I really learned was in a time of fear, if I just looked at the fundamentals of industrial, and again, hindsight's 2020, and it's why I probably went from scared to really bullish. And I talk about these fundamentals all the time. They got stronger for industrial. And it took me about 90 days from April to go from telling our team, like, I don't know when we'll buy our next deal, to we need to start buying quick. The fundamentals are all starting to stack up again. So that's probably what I should have paid attention to. But the scariness came from more than just business. There's things, in life outside of business. And now I don't know if it's like bearish or caution. Again, if I just stick to industrial, I'm actually still very, very bullish. But, you saw a lot of crazy shit happen the last couple of years. Meme stocks and, things trading at high multiples. A car was a better investment than just about anything. I think if you bought the S&P and you bought a Kia car, you did better flipping your Kia. So there's just a lot of weird stuff going on. There's been more debt taken on. And it just seems like, it's sometimes the euphoria starts to end. And I think we're starting to see the euphoria end. What does that mean? I have no idea. But the go-go days of like 2020 and 2021 seem to be tapering off, and reality is starting to set back in. And I don't know, maybe that's a cause for concern, but it's going to be different. I think it always is.
Yeah, we got some good things. I think I am personally happy that growth stocks took a break and have been hammered a little bit. I owned a lot of them. I got hammered, but that's okay. Crypto is not outrageously exponential growth anymore, which I think is good long-term for that. So are we still super frothy? In some ways, yes, but people aren't building houses because it's too expensive right now. People aren't building storage facilities because it's too expensive right now. Debt is still not super easy to get. So I think I feel the same exact as you, like a unique sense of caution.
And inflation is running, man. I mean, the Fed said, or whoever says it's 6 to 8%, I think it's 15 to 20%, and that's real. Now, one of my predictions is that the inflation story changes to deflation, which we can talk about.
Let's dive right into that, Chris.
I would just end that by saying, like, anybody that's like had a career longer than 10 years, we've acted like the last 2 years like making money is this easy thing to do. I mean, you get on Twitter and it's this kind of echo chamber of how people flipping stuff and making tons of money, and that's amazing and more power to it. But I don't know, and I'm not even that old. I just remember making money was really, really hard. It's very hard, and so I kind of welcome a little bit of a softening. I think people need to be humbled a little bit and brought back to reality. Again, it's not fun. Of course, it's fun to make money. I just think for the betterment of society, at some point we'll be better off when people have to, work harder or try harder to actually, make some money. Right now, it seems like it's being handed out a lot. I don't think that's healthy long term. So
yeah, I think the bottom of the I guess wage food chain, the minimum people near minimum wage, they're getting significant rent increases or pay increases with inflation, right? They're making more. They're switching jobs to make, they were making 10 last year, they're making 15 this year, whatever it is. The people who are getting killed are the middle class that are working for 60 grand a year and getting 5% annual bonuses, and they don't own a house, right? They're getting crushed by inflation right now, and it's really hard for them, I think.
100%.
So let's talk about the deflation thing. We might as well go right in since that was a good segue. I don't understand that. I want you to explain more about the actual tweet says. Do you have it? Do you have it, Chris? What number is it?
It's number 18. But I'll start by saying, like, and I'm reading this, so I'm looking this way. But there's something called the bullwhip effect, which is, and Wikipedia defines it as a distribution channel phenomenon in which demand forecasts yield supply chain inefficiencies. And so what you're hearing right now is, I'll take one step back. Everybody, like, on this planet now used to carry like 2 months of paper towels in their house, and now they have like 24 months of paper towels. We've bought everything. Like, it's been bought. Everybody is so far in front of what they usually have. And it's emptied stores. And then on top of that, like, production's really shut down. And so you have all these companies that are forecasting demand based on what they've experienced the last 2 years, which was high demand. So they're ordering a ton. And eventually, as things kind of cycle back through, you might see this period where we have all this inventory that we've ordered, and it's going to be a lot slower for people to buy that because they already have it. And so when inflation's going up, there's like this FOMO right now. People are buying stuff because they're scared that the price is going to be up tomorrow. And so if I go to the grocery store and I buy all the milk, well, then the grocery store next door is going to raise their prices on their milk until that's out. And so there's this race to the top, but the bullwhip effect would say, you know, when you snap a deal, it's like that, that race could happen to the bottom, and that all this material that we're buying might be sitting much longer. And so on top of that, I think that a lot of these kind of brick and mortar companies are continuing to continuing to decline, and technology, it's, you know, we sometimes think that technology, we're like in the 9th inning of technology. We really can make an argument we're in the 1st inning, and things are becoming cheaper, and these companies are going to continue taking over. I mean, you're seeing like what Tesla's doing to, you know, every car dealer or every car manufacturer in the world. These technology companies are going to continue to take over, which is deflationary pressure. So the third is, if we have an economic slowdown, which I'm kind of thinking might happen, and that, again, that's for anybody listening, it doesn't mean recession, depression. It just means like not this. Even if it was like this, that's a slowdown. That puts deflationary pressure. So I don't know. I think,
man, I'll disagree with you there when you say that technology will continue to really take over the world. I think there'll be diminishing returns of what technology can eventually do. I mean, we can only use so many apps to make our businesses more efficient. My business is pretty damn efficient right now. I don't see us being much different 10 years from now when a human actually still needs to sweep out my unit, but the phone call is answered by somebody in a different country. I just don't see that next level of like quality of life improvement that comes from technology. I mean, our phones are already more powerful than we could ever imagine. What is it going to get closer to our body and our ears, make us even more efficient? I think there's just going to be such a tremendous labor crunch. But I agree with you that people are buying way faster than they actually have the human need for these things that they're buying. So there will be a slack in the system when it actually does catch up, and that could really hurt when all these companies report sales declines eventually, and a little bit of deflation and money goes further.
Yeah, we'll see.
All right, man. So let's talk about industrial rents nationwide, 8%. I mean, your bull case on industrial is simple. There's not enough of it. They're not making any more of it. You talk about it all the time. I'm even more bullish than you. I think we're going to go up even higher than this because of last mile and, what do you call it? So online shopping, e-commerce. Give me the take on an industrial rents, and then we got to talk storage rents.
Yeah, I won't like go on my soapbox. That's for another time. There's actually an episode coming out of my podcast in 2 weeks about my thoughts on industrial, but in just like a couple bullet point snapshots. Number one, e-commerce only makes up 17% of all sales in America. 17%. If you ask the average American, especially Twitter people, they probably think like, oh, like everything is sold online. Not true. So e-commerce is exponentially growing, the demand. But supply is like linearly being built. You can't exponentially build industrial buildings. And in fact, the world's forces are making it slower to build. Supply chain, city governments making it tougher, land prices going up. I mean, everything on the planet takes much longer to build today than it did 10 years ago. The Empire State Building took 18 months when it was built in the early 1900s. It would take 15 years to do it today. So you have this increasing demand, you have this linear supply. What you said, last mile supply chain, 15 to 20% of the last mile supply chain is SG&A, 50 to 60% is the last mile cost, and 3 to 6% is the cost of their real estate. It's a rounding error. All this money is being invested into how do we minimize that last mile cost. So I wrote a tweet yesterday that
spending double on rent to save you a couple bucks on gas is a no-brainer.
They don't care. So all these companies are now going, hey, we'll pay higher rent. We just need to get closer to the customer, closer to the customer, closer to the customer. So the supply story is there, the demand story is there, the technology piece is there, and I could go on and on.
Have you thought? I'll challenge you in one way. Just something that came to my mind just now. A lot of your tenants are e-commerce. A lot of them are also tradespeople like HVAC, plumbers, roofers, all these people who are in the construction trade, and that's booming right now, right? So if interest rates go up, real estate takes a hit, no longer makes sense to develop real estate. Do you see your tenant base that could potentially be a risk factor, right, for your tenant base?
No, for sure. That could definitely happen. I think this infrastructure bill, to some degree, is going to keep a lot of that's going to offset things quite a bit. But you're right. I think there will be, the cities. If you really look at where everybody's moving, it really is kind of back to these mega urban areas. Now there might be people in the suburbs, but there will certainly be places that get hit harder than most when the construction washout kind of finishes. But again, I think that's a time when e-commerce like blitzes in even more.
That real estate might become
here in a bit, but largest leasers of office space over the last 2 years have been mega tech companies. That's not what you're reading or hearing, but it's the facts. What's going to happen to self-storage?
Self-storage, I think. I mean, my LPs don't. I'm incredibly bullish, Chris. I mean, I'm putting my net worth in. I'm investing every dollar that I have. I've co-invested over $2 million in the past 12 months. We bought $50 million worth of storage in 2021, $30 million in the last quarter. So my money is where my mouth is. But yeah, I mean, we're in small towns, man. Nobody wants to buy our stuff yet. So we need a lot of things to change in our business to really exit at the value we want to exit, but I don't really want to exit. I want to kind of keep running these things, and they spit off cash. So I think rents are going to go up, man. We're buying facilities that they haven't increased rents in 5 years. So not only do you have real time pent up demand, you have back demand that has not been filled with these rents. We're talking $6-7 rents in self-storage facilities that we're buying in these rural markets, and we're taking them up to 10 or 12 and leasing units. So it's crazy, man.
Do you know the answer to this question? When somebody leaves a storage unit, is it because they're taking all their stuff out and like throwing it away and they don't have a storage unit anymore, or are they just moving it to another storage unit? Like, does the amount of stuff just keep growing, or do people leave and actually go to the landfill and throw it all away or sell it on Facebook or whatever they do? Like, do you know the answer to that?
It goes to, so this is another tailwind that I've been thinking a lot about. I mean, it's going to a house or office or warehouse. That's where the stuff is going. But there's a huge shortage of housing. There's a huge shortage of warehousing. And there's a huge shortage of, not that many people are going back into offices with this stuff. So the fact that people can't afford housing and there's a big shortage of housing makes it so they live in smaller places and they need a storage unit. The tailwinds are serious as we continue to go.
Yeah.
But, okay, so outdoor storage, you're talking about truck parking. You're seeing a big need for basically last mile equipment to sit and be in a usable place outdoor. You're talking.
So like most industrial facilities are maxing coverage, but there's also more 18-wheelers now if last mile and delivery matters. I don't know about you, but Amazon literally showed up to my house 5 times yesterday. I don't know if we have a problem or we just order now everything online. And we don't have to go to the grocery store and order 50 things at once. We can just kind of pick and get it as we need it. But all these Sprinter vans, all these 18-wheelers, all these trucks and equipment need to be somewhere. And there's more than ever before. So outdoor storage. 2, back to the construction and everything. All this construction, like all this machinery and construction material, and this has to be put somewhere. And, if you're in a dense city, having it sit 4 miles outside of town in some yard as far out as you can get, I'm not saying that doesn't work, but it's a lot cheaper to store it close to the site. So you look at that, you look at kind of motor vehicles, and then you look at all these shipping containers and all again, it gets back to materials and supplies, and you drive through, you'll see a lot of these yards now where stuff is stacked up, trucks are being parked, and the question becomes, is there going to be more of that or less of that going forward? I think there's going to be a lot more. And the great thing about these properties is it's literally like land. It's just leasing land, so it's a covered land play. There's a lot of fundamentals. I know in our portfolio, we are often talking to trucking services and things of that nature. So, and then again, back to what I'm hearing in the market, funds are being raised like crazy. People are buying this stuff like crazy. There's a lot of good, debt to buy this stuff. So I just think it's going to really take off, and partly because of demand, but it's kind of been ignored. I think there's a lot of value in this stuff.
I think that there's a phenomenon, and this is just a theory, but this is something that I've been thinking about lately. I think there's a phenomenon that wealthy people are the ones who invest, but wealthy people are 1% of America. I mean, me and you, yeah, we order everything on Amazon because it's easier. The middle class friends that I have, and especially all the lower class people, they shop at Walmart. They show up at Walmart. They load their cars and trucks with Walmart. I don't know. It's just a half-baked thought that, hey, maybe the way we live is not necessarily the way that the average American lives. And Walmart, Target, showing up and doing the pickup. And also my Amazon experience has sucked lately. I got fake Nike socks, fake deodorant that gave me a rash, fake everything on Amazon. It's not showing up on time either. You know what I mean? It's like we're shopping at Target now, and we're showing up and they're loading the back of the minivan and we're heading out of there.
Yeah. This is a dumb question, but I would have assumed things are cheaper on Amazon than they are at Walmart. Is that not true?
No, not at all. It's kind of shifting now. I mean, people have they have you in the habit of Amazon, but it's cheaper at Target and Walmart for sure to get it online.
Okay.
So I'm bearish on Amazon. They're the largest employer in America in a labor crunch, and I'm pretty bearish. But we can talk about that another day.
Okay.
So let's move on to the next topic.
Oh boy.
So I just put a hat on that says Bitcoin 100K that I got from my friend Pomp when I was in Miami. Chris, you're a huge crypto guy.
I'll start by saying I'm not a crypto genius. I wouldn't take this as investment advice. I'm going at it based on, again, people. Institutions have barely dipped their toe in the water. They're all saying, like, 2022 is supposed to be their year. There's been a cult. It's a religion. I mean, I was talking to a friend the other day, and he said there's more people that called into Washington when they announced the some money printing bill they were going to do earlier this year. Part of it came with this regulation on Bitcoin. Well, you might remember on Twitter, the internet blew up. More people called their politicians about regulating Bitcoin than they did when they shut down the world for COVID. I don't think you can get elected as a politician anymore unless you believe in Bitcoin. Now, I don't know. I'm not an expert on Bitcoin. I'm not sure what all it's going to do. I'm not coming at it from there, but I'm looking at people. And I'm just saying they're the biggest wealth sources in the world, haven't even got in yet. It's become a religion and a cult. And so I thought it would be a good prediction. It's going to double this year. We'll see.
I'll take the other side just for devil's advocate purposes. I'll take the other side. I own Bitcoin. I own Ethereum. I own Solana. I'd like for it to do well. I think Web3 is massively overblown. I think the average wealthy person in America does not have any clue what the hell it is and doesn't care at all about how it interacts with their life. I'm glad a lot of really smart people are building that space. I realize I'm very ignorant, and I realize that the potential is limitless. That's what all the smart people tell me. Yep. I still don't get it. If somebody can't explain something to me in a minute and it makes sense, I think it's bullshit. And I've listened to very smart people try very hard to explain Web3 to me and the purposes and what it does. And it's never a good sign when I can't understand something easily. Maybe I'm not very smart. Chris, do you understand what the hell Web3 is?
I am trying. For anybody watching, I bought this book, and when I was off Twitter for a month, I'm only about halfway through it. It's called The Token Economy. It's done the best job of articulating it to me, but it's very confusing. You're correct.
Is there a real problem, Chris? That's the thing. Is there a real problem that tokenization and cryptocurrency solve? I mean, I think that there may be problems with liquidity and a non-regulated asset. I think regulation is pretty damn good for the U.S. dollar and pretty damn good when you get your money stolen and pretty damn good when you want to trust a bank to hold on to it for you. Is the problem big enough? That's the real question in my mind that I don't know the answer to. Yeah, I think people are going to get tired. The speculators are going to get tired of the fact that, hey, on April 2021, 9 months ago, Bitcoin was $20,000 more than it is now. The speculators are going to get worn out of having their cash tied up in this asset. Do they start selling it and it's just fade off into obscurity? That's greater than 0% chance that happens.
All I would say is how I started this. I follow what are people doing. I don't have to be an expert. The smartest people in the world are getting into crypto and Web3. I'm sure if we sat in the mid-90s talking about everything the internet would do, we would say, what does this even mean? This is crazy. Even talking about the cloud is nuts. And I think we're just living through one of those times where 5 or 10 years from now, it'll all make sense, and it doesn't now. And I just feel very fortunate to have some capital and, have a lot of relationships with people doing it. I'm not going to solve it, but I'm going to participate in it. I'd be a fool not to. And if I just saw the people and the money getting into this, it's not happening by accident. So
there's a lot of I don't think the really smart people are the ones that add the most value to the world, Chris. I think the people who get out, do things with their hands are the ones who really add the most value to the world. So when people always say like the smartest people I know are working on Web3 and crypto, the smartest people I know have always had their head in something, that's way above the head of the average American. So it's fun. It's fun arguing with you. I'm basically arguing with you for the sake of arguing with you now.
You are sweaty startup.
Yeah, I'm arguing with you for the sake of arguing now. So, okay, let's talk about BREIT. This is something that I'm excited to talk about. BREIT is, you go for it.
BREIT is Blackstone's retail non-listed REIT. It's raising on average $2 to $3 billion a month. It's basically all the retail investors in the world can now invest with Blackstone, and they're raising billions of dollars from individuals, folks or financial planners that manage money for folks with IRAs and 401ks. It is the beast, and KKR now has K-REIT, Starwood has S-REIT. It is becoming the largest form of capital raising in the world. And this wasn't a hard prediction to make because they already raised the most in 2021, and I think they'll do it again in 2022. That was not a wild prediction.
So
I don't think it's discussed enough, the BREIT phenomenon.
Just the phenomenon of how capital is raised. Was there really this many syndicators with this much access to cheap debt and access to capital as there is today? I don't think that there really has ever been this phenomenon of, hey, I can invest with Nick, I can invest with Chris, I can invest with Moses, I can invest with sponsors all over the country doing real estate deals. I can get actual returns instead of bullshit. They're not going to get paid unless I get my 6, 7, 8% preferred return, whatever it might be.
Dude, you can go onto Twitter now and DM with GPs on the spot. 20 years ago, you didn't even know who the GP was. There wasn't even the internet to find them. Like, you knew the guy around town that was buying properties or the gal that was buying properties, and that's what it was. It's changing so rapidly, and it's why one of my predictions is that crowdfunding's already through the period of like, this is sketchy, this is we're 10 years into it. We've gotten through the sketchiness. Anybody that still thinks crowdfunding is sketchy hasn't done the research. The top crowdfunding websites now are legit as hell. I know several of good friends that I would have thought would have never invested through a crowdfunding website. They're becoming LPs. Where candidly Fort Capital is probably, I wouldn't be surprised if we do a crowdfunding deal in 2022, 2023. But you're seeing tier one firms raise capital through crowdfunding, and it's just the beginning. Like, we're through this is kind of sketchy phase.
Yeah, I think, I wouldn't be surprised if some really unique things happen. I just made myself sound like a crypto and blockchain bear, but I wouldn't be surprised if we tokenize a self-storage facility with bromatoes in 2022. So I'll just put that out there. All right, let's talk about population growth. Chris, you're Super Bowl on the South. The South, I'll go ahead and just start this one and just say that the South is getting insanely expensive. It's getting insanely crowded. It's insanely hot. The electrical grid can barely keep up with the amount of AC that needs to run in July in Texas and in Florida and in Georgia, where I live. At what point does somebody say, okay, I'm not going to spend $700,000 for a dumpy house in Austin, Texas. I'm going to go to my small Midwestern town or my upstate New York town of 200,000 people, and I'm going to buy a full-on house for $212,000, a full-on big house to live there and work remotely. And I got a live music venue. I got 3 craft breweries. I have all the fun and quality of life without the traffic, without the expense, and without the blistering heat in the summer. At what point does the tide shift? I mean, how much are people willing to pay to live in these towns? That's the only question I'm really asking. At what point is the cost savings, the actual ability to get ahead in life, worth not living in, DFW, Austin, Miami, these places that are booming?
It's definitely more expensive than it was a few years ago, but
a little bit. It's double. It's double.
Okay, but double is still relative. Like, to live in New York and pay $5,000 a month, you're living in like a shoebox. I'm going to say something controversial. Well, it's controversial maybe just to a few people, but it's my belief. People are not just moving to the South because of taxes and more affordable. It's freedom. Mm-hmm. We now live in a world where people want to be free. And the South, the Sun Belt states offer freedom. Mm-hmm. My kids and my family are living a completely different reality than folks in some parts of California, New York, some of these states that are almost tyrannical in a lot of ways when you look at the policies being pushed. Now, I don't know, man. Downtown Atlanta, downtown Austin, their schools are out right now because of Omicron, whereas upstate New York, they're in school. You know what I mean? It's not all roses in downtown, very liberal metros where they're locking people down as well. Well, I just think that's going to change over time. Where I think the next few elections will be, it's not even Republican, Democrat anymore. It's literally let us live our life and let us get back to making adult decisions. And I think the Sun Belt is doing a better job of letting folks make adult decisions. Now, I'm not going to get into my thoughts on the virus and everything else. That's for a different time. I would just tell you, when, again, observing, talking to the people that are here. When I talk to somebody from California that's moved here full time, and I'm asking them why they're here, low taxes is like the 10th reason.
Yeah, that's true. That's true.
They are moving because they want to live a life. They want their kids in school. I know you said that some downtowns or some metros are shut down for a second, but as a whole, over the last 2 years, it is so polarizing how different things are. And I'm bullish on folks that are offering freedom personally.
Yeah, my
freedom is a great thing to pay for.
My poor friends in Canada had to be home by 10 p.m. on New Year's Eve because they're basically telling people that they can't go outside. They cannot be outside. I'm not an overly political person either, but that is absolute absurdity. So you're right. I think the South, that's why I live in Athens, Georgia, is that I get to make the decisions to do what I want to do, and everybody else gets to do what they want to do as well, which I think is a pretty fine system. It's so easy to make this so polarizing, but even watching the CDC walk back so many things, and doctors that have been accomplished for decades are being erased off the internet. This is mass hysteria, and there are a lot of children and a lot of people that are going to be, this is going to linger on in their life for way longer than it ever should have. And again, I'll end it by saying one reason why I'm bullish on Texas, Florida, and the Sun Belt, they are offering, to what I've seen right now, the best opportunity to get back to a life of pre-COVID than we've ever seen. My hope is the rest of the country does that quickly. And if I know America like I think I do, they will eventually. But right now it is black and white. It's so polar opposite. I have faith that 95% of Americans want to get back to normal life, and I think it's the loud 5% that are affecting a lot of these places. So I'm bullish as well. I've been guiding this conversation, Chris. I'm going to let you take the lead on a couple of these. We only have a few more minutes, so why don't you take the lead on a couple of these things that you want to hear my thoughts on, or that you think are that you have some unique notes on. I know you have some other kind of polarizing, cool things in this prediction thread.
All right. Well, this will be a good one because you are a fully remote overseas company. I'm an in-office company. I think the office is coming back. What do you think about the office?
Actually, I had a note on this to talk to you about this, and I want to ask you a question. I don't want this to turn into a Chris mentor Nick situation, but most of the times we're together, that happens because I respect your opinion a lot. We are starting to consider having an office in Athens. I mean, we are growing really quickly. We have some awesome talent that we've been going out and recruiting. We have people that are tired of sitting in bedrooms working in environments that are not conducive to getting to know anybody. We have, we want to build a culture. I mean, it's really, really hard to have friendships and have experiences and memories with these people that we work with when we're on the internet and we get together once a year to drink as much beer as we can on a golf course and then say goodbye to each other. I don't want to be tied to that's the other dilemma, right? I don't want to be tied to an office. I want to have the flexibility to go live my life and travel. I have young kids right now. I'd really like an office now, but man, I'm excited about work. Like Sunday night comes around and I can't wait to get up in the morning so I can check reports and look at how we're doing and analyze the AdWords and see how the new deals are coming along and talk to our acquisitions team. So, I don't know. We'd never be able to take everybody in-house, right? We love our team overseas. We love our team down in Colombia. Our CFO does not want to leave Boston, but I think the rest of our team would be pretty damn open to relocating to an awesome town like Athens, Georgia.
So, look, I think when I talk about the office, people just automatically assume it's like everybody must be here 5 days a week from 8 to 6 and sit at your desk, and it couldn't be further from the truth. What we do want is an office where people can come and collaborate, where you can get to know the people that you're working with. And I'm just going to say it. Again, I would love for people to disagree with me. It's great. If your executives and your managers are in the office and you want to be heard and your ideas to be heard and you want to collaborate and innovate, it's a lot easier to happen in the office. I think we're going to experience this period of FOMO, which as it'll start to roll out, where there will be this whole group that's like, we're not going back to the office. Great. But some of their peers will be in the office. It'll take about a year for decisions to be made, promotions to be made, things to happen. And what you'll see is this FOMO effect. Oh, something happened great to my friend. I wonder if that's because he was in the office. Nobody's actually going to say that's why it happened, but there will be that vibe. I'm telling you right now, the deals that we're getting done right now, we're meeting people in person. Like, it isn't happening over Zoom. It's just not. You and I went to Miami and we spent all this time together for 3 days. Would you have enjoyed it if we just maybe put a Miami background on our Zoom screen and just chatted for 3 days? No, you would have been miserable.
Yeah, it's really not the same. It's really not the same. I'll give you a direct example. You can keep going. I want you to keep going, but I'm going to give you a very direct example that backs up what you just said. My job at my company right now is to track down talent and figure out who fits where in my company. That's all I'm working on. Who fits where, who does what, how are we going to build a company that goes from 30 people to 300 people and have people in the right situations to manage that. I have great talented people that I have not seen or talked to outside of a formal Zoom meeting with 10 other people in 6 months. I don't know how they think about the world. I don't know how they think about their jobs. I don't know how they think. And we do 6-month reviews where I get on a call with them and ask them how things are going. I just called most of those people this week to just touch base with them because I don't even know how they're feeling about their job.
Yep. Dude.
That's tough.
And so it's not we have hybrid. People can work from home when they want sometimes, but the core of our business is going to be at an office. And that's the decision we're making. I think all these corporate companies are playing chicken with each other. As soon as Goldman comes back, all the banks are coming back. It's a big game, and it's all being held hostage by the media. You really talk to these people that are running these big corporations when they're not on the media, they're all like, we need to get back. We should be back. This is stupid. I can't believe we're kicking this out another 3 months. but everybody's being held hostage by who's going to be in the headlines for literally going back to the office, which is insane to me that is 2 years into COVID, like this thing that we're still talking about. I'm just one opinion, but I think it's going to be important, whether it's in an office. People are social creatures. It's always been that way. And by the way, for the people that think we should never go into an office again, I would ask yourself, do you expect your doctors to be in offices when you need to go to the doctor? Do you expect people to be at a restaurant when you show up to a restaurant? So you expect everybody to be somewhere except for yourself. It's not going to work that way. Mm-hmm. And again, nobody's ever going to say, hey, you're getting promoted because you were in the office, or hey, your idea won because you were in the office. But people will understand over time. It's been a saying for hundreds of years. You want to be in the room. Mm-hmm. Period. End of story. I would tell young people all day, be in the room and you'll probably make it quicker. And I'll end that by saying I'm going to get attacked by some of the tech people. There are industries and tech industries where you can be fully remote, never in an office, and it works. It doesn't work in businesses where client-facing sales, things of that nature happen on a day-to-day basis. It just doesn't.
You got me fired up. I'm going to call Danny right after this and try to sell him.
Get an office, baby.
I had a tweet back in September 4th, 2020. I just searched it and pulled it up. The folks who work from home don't call the shots. The folks who want to work from home don't call the shots, and the folks who call the shots don't want to work from home. And I think, Chris, you call the shots for sure. And you
the other part, and again, like I can't believe that the office is like this polarizing topic for so many people, but even just like living with kids at home and trying to get work done, you see people post all the time like, I love working from home, and they're not working. They're like out on a walk, or they're like doing stuff. It's like, okay, but even if you're going to work from home, you've got to work some point. And I would tell you, most people, whether they say it publicly or not, I know they say it privately, would say productivity is at all-time lows for a lot of companies that still haven't brought people back.
I have a good friend of mine who runs a company, and he has somebody in his office, but he's been outsourcing a lot to the Philippines. He's got a lot of Filipino talent. And he basically all the admin work, and then the people who are on his management team, the people who are calling the shots, making decisions, are in an office together. A lot of them keep trying to like, hey, we need to hire this person. We need to hire a friend. We need to hire an American here, an American there. But they want to work from home, and they don't really want to be a management position where they're actually doing business. They want to block and tackle, admin, customer service, whatever it is. And he's like, I am not going to hire an American over a Filipino. A, the Filipinos are better at their job, and B, they're $5 an hour and not $50,000 a year, and I don't have to have an office for them. I mean, that's another big part of it, right? If you want to work from home, in the fact of just, hey, do your job and get do the admin stuff, and it can be easily outsourced to the Philippines. You're competing with very competent overseas workers, which is another tailwind of remote workers. You know what I mean?
100%. We have 5 full-time employees out of India. Amazing people, super grateful, super humble. And I would say to the folks in America that are all excited that they can work from home, there's certain roles that if you can work from home in America, it's what you just said, then it can be done in the Philippines. And if the cost is, from $70,000 a year to $12,000 a year, that is only a short-lived window where, yeah, you might be working from home in America in some roles for a period of time, but that thing's going to get outsourced pretty quickly. And that will happen over the next decade. So people will look up a decade from now. And to young people, I mean, we see it now with folks recruiting. On one end, we actually have an advantage. A lot of people are asking, are you in an office? I do not want to work from home. I want to work from companies where I have a place to go and meet people and be mentored, and especially for young people. We didn't even talk about this. Imagine being your first day of work, being at your bedroom table and trying to learn from people that have been in the business for 30 years. They don't want to spend 2 hours on Zoom every day trying to mentor you and teach you life skills. It just doesn't work that way. And it's just like crazy that I even have to like explain this to people. But I would just end that by saying, you see a lot of young folks right now that feel very entitled. They're coming with a list of demands. I will work for you if you let me work from home, if I can be flexible, if, that is, you are in a window right now that you may regret that decision long term if the world thinks it's going to go back to possibly even close to the way I think it will go back. And I am one opinion of 7 billion people. I'm not saying I am right. It's a prediction. We made a prediction.
Yeah, we're making predictions. You're putting your money where your mouth is as well by doing some investing in office, which I think is awesome. We'll see how it plays out. We could be wrong. I think it'll always be hybrid. We're going to be. I think one of my 100%. Big advantages, I can find great talent that does not want to come into an office, and I'm okay with that. I can manage that. It's not going to be a requirement for me. I'm just starting to see the benefits of having our core group of decision makers inside of Bolt Storage together for happy hours, for meetings, for things in an office, right? So we'll see.
I will just say this, and I might get laughed off the stage here. I
love this side of Chris. I think
your company will get a lot better, not just by buying more shit, but better cohesiveness, team decision making if you get an office. Period. End of story.
That is a heavy pull, Chris.
I've told you a lot of things over the last 2 or 3 years. I truly believe that, and I think.
Well, you've changed my life. One thing you changed my life on was one of your recent podcasts. I'm going to give you a shout out. You talked about how to build a sustainable real estate private equity company, and you've been preaching that to me for a year and a half since I met you, and it has changed everything about the way that we have our fee structure, the way that we make sure that even if we're not doing deals, we can make payroll. We're getting compensated for any bit of work we're doing throughout the process, and it's just so much better. It's so much better of a way to build a company because I can go out and attract talent now. I have the money to pay them. We can get great people working on these deals. Gosh, I'm excited about how Bolt Storage. I'm excited about the structure of Bolt Storage because of that advice, and I feel like I can go out and I can attack the job market and get people away from their jobs to come work for me, and I can feel confident about paying them well. I'm not stressed about making payroll. I can bring in really good people to manage these assets. It turns out that's what our LPs want too.
I know. We have built such an amazing team at Fort. Just a bunch of really talented folks that care about each other, that want to do better, not just financially, just in life, really in life. And to provide that environment with no money to spend on anything is just a very tough way to do it. And so
people would be surprised how many real estate private equity shops could not make payroll if they were not doing deals.
Oh, we'll find out at some point.
It's cutting down your fees, giving into the LPs, or just thinking that LPs want that you to be on a shoestring budget and give all the upside to the cash. I mean, operations is arguably harder to come by and more important than capital right now. So yeah, it's a blessing. It's a blessing that you gave that advice. I'm gonna think hard about this office stuff. But do you think inflation is likely to be segment specific, Chris, with goods for new home builds going up while technology goes down, as an example? Increase post-pandemic. Do you see those things increase post-pandemic migration trends?
Yeah, I think if it relates to construction, we're so behind on housing in this country. I mean, we are so behind. That is one thing we weren't in 2008. We were in front of the curve. And that is as much has to do with this NIMBYism, the polarization of new development, and cities taking forever to get things approved. And it screws everything up. It's hard to get jobs scheduled, lined out when you don't know your timeline because, somebody forgot to do an inspection the whole process is really strained right now. And so, yeah, I think it'll be segment specific, but I think, material costs and things for building, it's without just a total collapse where everything stops and everybody has to reprice. It's hard to see how the cost of building is going down anytime soon. Somebody says, can a regular Joe with no storage experience still get into self-storage, or are the Nick Hubers making it near impossible? Nick is a regular Joe. I'm a regular Joe. Absolutely, you can. I don't even buy deals that are under $1 million now. The best deals and the life-changing deals are under $1 million. A friend of mine from upstate New York bought a $400,000 building. He's just a guy with a family who had a $100,000 a year job. It's worth $1 million now. Life-changing money. He's 33 years old. 18 months later, there are lazy real estate operators everywhere. There are rich people who don't care about their real estate. They play golf. They ignore it. They don't lease it. They don't check AdWords. They don't make sure they have a Google My Business location. There is
juice to squeeze all over this world. I'm going to leave you with, look up from your damn computer screen. Everybody wants to start a business on the internet. Everybody wants to see how they can make money online. It's the most ridiculous thing ever. Get out there, look in your town, look in your world. You're in a very limited geographical region where people need goods and services done right then. They need a place to put their stuff. They need industrial real estate. They need offices. Fill some of those needs and get yourself rich. I mean, it's ridiculous. People are okay. I'm gonna step off my soapbox now, but that's my parting 2 cents.
What drives oil to 100? I'll end it. One, our capital budgets to drill oil are at all-time lows, yet the world is at all-time highs for demand. Everything you're looking in the background of my screen and his screen is made of petroleum. This ESG narrative, while it's great, people are hallucinating, thinking that we don't need oil and gas. And this idea that by not drilling it in America and letting them drill it over in Iraq and Iran and overseas, we're somehow doing the world any good. Those are less safe places with worse environmental controls. And it's not like the pollution, if you drill in Iraq, just stays in Iraq. We're one globe. Like it goes everywhere. And the last thing I would say, all these countries, we're so we're so privileged to be in the United States. But all these countries in these third world countries, they're not going from literally walking down dirt roads to get water to a Tesla. Like they're going to go through the fossil fuel generation before they get there. And those countries are coming on like crazy. And so all-time low supply for people drilling and mining for oil and gas and all-time high demands. And our country is doing no good by just assuming that we'll just look the other way and hope it all works out. It's heading to $100.
I like it, Chris. I like it a lot. Okay, I think we'll do this once a month. I'm going to put this on my podcast. People asked, how do you learn the self-storage business? Well, this is a good time to shout out Chris's podcast. He has The Fort with Chris Powers. Mine is called The Nick Huber Show. Mine is a direct lens into real estate through the self-storage perspective. That's the best place to start. Make sure you follow Chris on Twitter. Thank you, everybody.
Thank you, guys. This was awesome. Thanks, Nick.
Have a good rest of your week and go out there and kick some butt. Goodbye.
See you, buddy.